Hey, what's up, traders? Welcome back to my channel once again. So, guys, in this video, I'm going to teach you guys about inducement. All right, because I noticed that so many traders really have issues trying to understand market inducements, or I know many of you guys must have been hearing about market inducement when you hear traders saying they are trapped and all that. So, this video I'm going to do, of course, guys, I'm going to make it very simple for you guys to understand, such a way that after watching, you'll be very clear. All right. So make sure you stay around to the end of this video so that you understand everything I'm about to say on this particular video. All right. So please, if you're joining us for the first time, I want to welcome you guys. You're welcome to my channel. Please like, subscribe, and share. And also make sure that this video gets viral to so many that will also want to know about this thing. Of course, you know, guys, that I give you tips that helps you guys in your trading journey. And also don't forget to also turn on the notification bell so that you get notified whenever I post or drop my new video or new content. All right, guys, so back to what I'm going to say in this very video. So I'm talking about inducement. Like what I'm saying, you notice that so many traders are being kind of trapped in their trade. So whenever you hear traders saying a lot of stories like they enter the market and they are trapped, maybe you're trying to buy, and the markets, you find out that you are being trapped, or you try to sell, you find out that you're also trapped too. So that most times what happened at that point in time is what we call what's inducement, okay, which I defined inducement here, which I say it means area or level that tends to trap buyers or sellers returning to or to be buying or selling, okay? So there are areas that tend to trap buyers or sellers in the market, whereby they tend to pretend to be either buying or selling. So most times when you see such opportunities, you hear traders running into such opportunities and you see them getting trapped by such kind of opportunities, not knowing that it is not an opportunity, it's an inducement. So that is why most times I always tell traders that not everything you see in the market are opportunities, all right? We have so many opportunities, but not all are tradable. That is the reason why I do say that, because sometimes you get trapped in such market scenarios. All right, guys, so I have before me some drawdowns, which I did here. You can see this, for example, now. So I'm going to be marking out the talking about the two. So I'll talk about also liquidity, okay? So we'll talk about liquidity. We said liquidities are areas whereby there is a money order flow, okay? So, and this always occur where there is equal highs and lows, all right? So you tend to find liquidity, and at every swing point in a market, you tend to find liquidity at that point, all right? Because you can see here we have liquidity at this swing points, yeah, and we also have liquidity, yeah, liquidity, and down. Yeah, you also have liquidity resting here, and also at this, even at major level, we also have liquidity. Even here, we have liquidity, and just the same thing, liquidity here, liquidity here, liquidity here, just like that. At everything high and low level, we also always have liquidity resting there. All right, so now, guys, in this very video, you can also notice that if you look here, we have, now I'm going to talk about the aspect of the inducement. Now, which if you see here, we have price or market buying at this particular point here, all right? So price action or market bought from here. And if you notice at this point here, you'll see there is a kind of a little resistance, minor resistance level here, whereby so many traders we feel that, okay, this market, I'm showing you guys how inducement work. I want to make sure I break it down to the point that you guys can understand what I'm about to say, what I'm saying, okay? Now, if you notice here, you will see that we have this minor resistance level here. This point here, if you see here that market tried to sell, or sorry, market tried to buy at that point there, and you can see so many traders that ran into this point, that those that entered at this point, at this market point here, you can see how the market brought them down. Now, if you look at this point, it was an inducement whereby market was trying to induce buyers at that point. So they tried to also start to fake them out. So they're trying to feel that, okay, the market is going to buy at this point. And what happened when they entered, you can see how the market came down again. And they tried entering at that point again. And when they tried entering at that point, what happened? You can see the market still came down. Okay, took them out. So yeah, for those, many of them will have already set their stop loss around this place. Okay, you want to buy? You want to buy at that point here. Yeah. So sorry. So they want to buy at this point here. Yeah, for many traders will have already set their stop loss around this region. Okay, let's say they're targeting here. Okay, so these are many traders will have entered this market. Okay, so you see them setting their trade here, stop loss around this region. Okay, let's say they have stop loss around this zone. So you see then what happened, and the moment they entered at that point there, because they are trying to target this next resistance level there, unfortunately, they were stopped out by the market, and you see market and also sweep them out, because at this point here, it's not, price is not at a discount area, or it is too high for market to buy at that point. So market needs to still go down, because I said something previously that buyers don't buy when price is high. Okay, they buy when price is cheap. So this area here is still high for price. So that is why you see them taking out buyers, and they still push the market down. Not until price action, you see where they now came to the major demand zone, and they took their buy at that point. Now we now have a break of structure. Now don't forget that we also have liquidity resting at this pivot point here, or this swing high. So but price action took out this. So we have a break of market structure around this place. And you can see again, after price has done, the same thing happened again over here. And you can find out that those that were trying to buy at this point, they're also trapped. Okay, so you can see inducement. Now trying to induce buyers. This is how the market is. This is I'm saying is what or how it plays out in the market. Okay, so trying to induce buyers to buy, like tempting them to buy. Okay, and you see this, you say, wow, this is a very nice opportunity for me to buy this market, and you just go in, like what happened here, you set your stop loss, and the moment you enter the market, takes up what we call stop hunt, sweep out, take your stop loss out, and thing comes down again. So you see this now, and now coming down to the major level where you're supposed to buy. Okay, but because you saw this and you ran into the market, and the market tried to take you out, and it comes down to this point here, and the market went up. All right, so the same scenario as well happened at this point here. Okay, you can notice here now, this market is for a bearish structure market. Okay, so market was going down, and if you notice, you'll find out that price action did this and came down, went up, and now look at what I'm saying, guys. You can see here again, we have inducement. Yeah, okay, now this is inducement at this point here, this place here where I'm touching. You can find that these are inducements. So let me use this. So okay, now you find out that we have inducement at this point here. This is an inducement. Okay, now you notice, you see that they try to trap sellers who wanted to sell at this point here. So you can see that when they wanted to sell, they were stopped at the market, went up to mitigate this resistance zone here above the supply zone, above this inducement. Okay, so here was just like a trap to tempt sellers to enter the market. Okay, so when they enter the market, you find out that the market, after hitting here, now took out all the stop losses of those that are selling at this point here. Market went down to this. Now you can see, and we also now had a break of market structure. You can see that we had the short structure shift around here, and the market did repeated the same thing as well. You can see again, this was an inducement. Okay, we also have inducement. This was an inducement before market going to mitigate a very nice other block or gap around this region here. So you can see price going to mitigate another block of a fair value gap around that point there after taking out liquidity. Okay, because this is also liquidity. So we have price taking out after taking out liquidity and inducing traders that entered there very early, and you can see where the market now went to and now started dropping massively. So guys, this is very, very important that as a trader, you must understand how this thing works, okay? Because in this situation, many traders have been, they have been trapped by not knowing how to identify liquidity inducement and as well as liquidity in the market. That is why I'm taking my time to also give you a breakdown of how this thing works so that you will not fall or will not be a victim of market inducement and also market liquidity. All right. So now let's quickly dive to the chart because I don't really want to make this video too long. So let's go to the chart to give a breakdown of actually what we have said so far about this market liquidity and inducement. All right. So here we are, guys. Here we are in the chart. Now you can see in this chart here, so far so good, guys. I can identify that we have inducement, or sorry, rather I can say liquidity, not inducement. You can say we have liquidity here because we have equal highs around this region. Okay, so you can see we have equal highs around this region, guys. So equal highs and those. Okay, so we have equal highs around that place here, and you can see that we have a swing high. This is a market. Now let's look at the structure because we can identify that the market is a bullish market structure. So we can see this is the liquidity, and I told you guys every swing highs and lows we eventually used to have liquidity around those regions. So you can also see here this point here we have this swing high, a resistance, but you can see that liquidity was resting here, so we have liquidity here, but you can see that market has to take out liquidity with this by creating this buy, which was a market gave a higher high by taking out liquidity and this high that was resting here. So after that, you can see again that now I want to show you guys a typical example of what I was talking about. Okay, so you can see this market is a bullish market structure. That is how we are seeing price taking out liquidity. And don't forget, I told you we have liquidity down below this region here as well. So we can see that there was also market liquidity and sorry, inducement as well. But this was not an inducement, but you can see here that markets came to this point here because we have this buy order block resting around this region here. So price came to mitigate that order block there. Okay, so now let's see if we can we have identified this. This is an inducement or liquidity. Okay, so you can see this was market liquidity. So which I already explained reason for this. I told you guys that it is buyers and sellers buying and selling around this place. But you can see equal highs here. So sellers we are trying to sell market at this point, but not until you can see here that they were trapped. Yeah, you can see that sellers were trapped here. Okay, trying to sell this market down here, and you can see how they were taken out by the buyers. So the buyer had to break these highs. Okay, how to break these highs to push market up. Okay, so in every level, we usually have those liquidity. Okay, so you can see here, this is also liquidity as well. This is also liquidity and also inducement. So we have this liquidity here. So you can see that those that were trying to sell here were trapped. Okay, so sellers that came in here trying to enter the market for a sell, and what happened to them? They were taken out, they were stopped out, and they can also see. Guys, I'm taking my time to show all this so that you can understand how this thing works. Okay, now you can see here that at this point here, we also have, you can see this is a swing high, but liquidity is resting here. Okay, liquidities are resting at this point. The way there's money resting at a particular point. So we have liquidity resting here, and that was what brought about market taking out this liquidity around that point there. Okay, so because there was money resting at that region, that side for the market to take out. So that was why the market had to take out that liquidity around that point there. So you can also see here, guys. Now we can see here that the market tried to buy at this point here. Okay, now let me show you guys this inducement. Okay, so we can see here that Now, can you see these guys that those that entered at this point here, you can see how price action came, took them out, came down again. Okay, so this was market was trying to induce buyers here, then try taking them out because there was liquidity resting here. You can see after that the market now went up. So you see how market was this place they were trying to induce those that were trying to buy the market at this point before the market gave a good buy. All right, so these things are things that happen, they happen every time in our chart. So they happen constantly, but most times we don't take notice of it. Okay, so we can also see here again that this point here, okay, where is that area I marked? Okay, so I'm trying to pick out another level for us again. Okay, so we have this every swing high, but don't forget the major thing you need to do is you identifying your pivot point, okay, area of resistance. Okay, like this place now is where I'm marking my own high. You can see here, guys, now there's another block here, but you can see that when it came here, those that sold after selling here, what happened? You see the market went up again. Now let me highlight that place at this other block region, because we had another block resting around this point here. So we had other block resting here. Okay, so you saw what happened here, that after those that were trying to sell, after they sell, so thinking that market will take out, because down here there are a lot of liquidity here, market needs to take out. So but unfortunately for the sellers, the market did not take out this liquidity. So, and you can see here that they were being stopped out by the market because it's what took out this, even this high here was taken out. So you can see how the market went up after taking out those highs. All right, so now the major concept about this liquidity is very, very important, and inducement, because when you are trading your chart, we constantly see them trying to act as, now look at this, guys, can you see this now? You can see that this is an inducement. Okay, this is what I'm talking about, guys. You can see how market was trapped sellers here, claim was pretending to what to sell at this point. But you can see after that, those that entered there were stopped out and the market went up again. And you see this, and the same inducement happened here again. Okay, you can see the same inducement happened around this region here again. Okay, can you see how this market was taking out sellers here, inducement? Okay, can you see this? And after taking out or liquidities and those that are trying to sell here, until it now gets to this point here. Can you see this daily high? Okay, so you see where price now got to this last high here. Then before you can see price now sell from that point there before the continuation of the buy. All right, so you can see how market were trying to stop out sellers at this point here. So inducements were majorly occurring at this swings high, okay, because they were trying to take out liquidity. And you can also see here again that we also had a buy order block. Now, this is another concept I will talk about, but not now. But because our major concern is talking about market inducement. Okay, so you can see how these things happen. Most times it happens. Okay, it happens constantly like that. Okay, but many traders does not know. Okay, many of us don't even understand or don't know when these things happen. All right, so these things happen constantly. Okay, they happen constantly. Now you can see this here. This is also an inducement. Okay, we have this as an inducement. We have this as an inducement, trying to trap buyers. Yeah, all right. You can see how market was trying to trap buyers at this point here. So buyers, they're trying to buy at this point. So you see when price came here and they tend to want to ride the buy, maybe ride it to this point here, and you can see that they were stopped out because this market was not a buy market. Okay, so it was just this, that level was a level of inducement, or rather liquidity. Okay, you can see it was a level of inducement to trap buyers, because the market obviously is, you can see that the market is a sell market, which we can see structures market was giving. So what this point here was, what these people were trying to do here was trying to trap buyers, those that would run in or rush into buying this market. So you can see that they were trapped at this point before the market continued the sell to the downside. So, and if you look very closely, you'll see that all these swing points here, you find out that we are having liquidity. Okay, market liquidity, we are occurring at these swing points here. Okay, we are having market liquidity and market liquidity around this region. Okay, so you can find out that liquidity were much on this area. So guys, so that is how we are able to get all this. You can see here again, guys, you can see that there was inducement here. Can you see it here? So market inducement, they induced sellers here. So they tried to sell at this point here, but unfortunately to them, the market did not sell. So buyers took at that level. Okay, so and there were stop losses of sellers here. Money were resting here. Okay, so they tried to take out the money that was resting on this place, because in the market there are a lot of money resting in the market, both buyers and sellers, or sellers orders, I mean to say, so are resting at that point. So that is it, guys. So I hope in this video, guys, you have been able to understand how you are able to understand how to identify and know market liquidity and inducement. All right, so if you enjoyed the video to the end, give us a thumbs up, and also make sure you like video, comment, and share. If you also have a question, don't forget to answer. You know, the last time some people dropped their question in the comment section, and I also replied. So make sure you do that as well. If you have questions you want to answer regarding to this, I'll be available to answer you guys. So thank you so much, guys, for your time. Thank you for watching this video. Don't forget to turn on notification bell. When I drop new video, you'll be notified. All right, guys. Thank you.